Hi ladies and gentlemen, this is your boy Advantage. In today's video we're going to do the continuation of our price action trading. In part 1 we did a little. Today is the part 2 of the video. We're going to analyze candlestick without using any indicator. With that being said, let's get to the computer screen and do price action analysis. Now look closely, you will see that this is AUD USD. I'm going to analyze AUD USD. So if you've not watched part 1 of the price action video I made earlier, please do well to do so that you can follow up and understand what we are really doing here. Now, number one thing, when you open this, change your candlestick should be 4 hours. You will do the analysis on 4 hours time frame and take our trade in 1 hour. So change it to 4 hours. That's number one. So when you look at this, you see that it's a downtrend. You've identified your trend. Then another thing you should look at is look at the background. You will see tiny lines. You see tiny lines at the background. So those tiny lines, just check how many pips. So you see that okay, let me zoom it a little bit. See, okay, you see that when you zoom it, the tiny lines from here to this point, this is 50 pips. Okay, 50 pips. You see that from this point to this point is 50 pips. So the thing you do here is to draw your zones, which is also known as round number. So I will go by 50 pips. I've explained this in my previous video. So all you should do is draw your zones, which is also called your round number, at that point in which you have identified this line at the background. Make sure you zoom that line to have 50 pips from each of them. So when you just look at from here to this one, you see that it's 50 pips, exactly 50 pips. So you draw 50 pips, you put your line. When you draw again to the next line here, you see this line, you see that 50 pips. So okay, 50 exactly. So you draw your 50 pips, so just like that. So until everything is set. All right, now this is great. So from here to this point is 50 pips. From here, from this point here to here is 50 pips. From here to here, from here to this place is another 50 pips, which is 100 pips, you know. Now you've just identified your zones, which is also called round number, which is also going to serve as your entry point. Do we understand? Do we really understand? Now at this point in time, you've just done justice, so you are ready to trade. So when this candlestick takes off from this point, it moves, it takes 50 to 100 pips. So from here, from this point to this point is 50 pips. From here, 50 pips. You see it moves back 50 pips, it moves back 50 pips. So if it comes down straight like this, this is 100 pips. Do we understand? Now after you've done this, for me, the way I trade, I take the movement of the candlesticks by 50 pips. I take trade 50 pips. So you've done this, and the trend is actually a downtrend. As you can see, this is a downtrend. So the next thing you do is to draw your support and resistance level. Your support and resistance level. Meanwhile, these zones can also serve as a support and resistance level. So how do you mean? This support and resistance level I am talking about is called touches. It's called what? Touches. This support and resistance level I am talking about is called touches. It is different from this zone. It is different from this round number. It is also different from this, which we may call support and resistance level. Now, how do we draw the touches? Now, each movement of the candlesticks has 3 touches. Now let's take this one for example. From here you draw your touches to the next level. Sorry, so let's get it draw perfectly. So you draw your touches. Now this one is your touch number 1, this one is your touch number 2. So we are expecting touch number 3 before this touch will expire. So each movement of the candlesticks will always touch your support and resistance level 3 times before it got expired. Now how do I mean? Look at this one. From here we'll draw this one for example. Now this one, this movement was a downtrend. Now it started here, this place is 1, it touches here and fall back again, this place is 2, it touches here, this place is 3. So this is the final touch, 1 2 3, and this one has expired. And when you look at this one has only 2 touches, so it is the third touch that we will take our trade, or the second one, whichever way. And mind you, all these touches we've drawn, you don't take trade in between these zones. So you take trade from each touches at the zone. Now this one touches here, he came down all this way to this point, it moved and it touches here. Now at this point in time, so this one now came up the way here, touched here, moved up, came down again and touched the same line you've drawn, took off. Now from this place, now we are expecting that this candlestick will come and touch this place for the 3rd time, then it will expire. So where we should be looking at to analyze this candlesticks is here. You see that this is a triple top here, this is a triple top at this point in time. All right, so now it touches here, so we look at the fall from here. So this candle, this trade will come down to this point, it will come and touch here before it expires. Now we'll now measure 50 pips. Now this one is late, we cannot take this trade again, this particular one, this one now we cannot take this trade because we are expecting the 3rd touch before this line will expire, so we cannot take this trade again. The reason being that the market have fallen, we are late, the market has fall down before we came. So I did mean when we opened this chart, we saw this is a very good entry level here at this zone. So I told you take from zone to zone, so from zone to zone. So this would have been a 50 pips in profit. I did mean we saw this earlier, we would have taken this trade. So when you look very well, let me zoom it a little bit. So when you look, you see that this one rejected here, showing a sign of this was a very huge drop, telling us that this market will continue to move after this one expires. But you see the head and shoulder here, so our entry level would have been somewhere at this point, this candle, this would have been our entry level. Then we will now take 50 pips from this place, sorry, so we'll now take 50 pips from here to this point, and we would have been and put our stop loss 25 or 20 pips away from our entry level. So did you see that here we would have taken this trade expecting that this movement of these candlesticks will go down to touch this our zone here, this line here, then this trend will now expire. Now it happens that I did mean we saw this earlier, we would have taken our trade from this zone to here, we got our 50 pips, even though we are expecting that this trade will come down to this, it is going to be a 100 pips movement, it will come down to this point before it would expire. So from here to this place you would have gotten 89 pips, but what I do myself is I take 50 pips at each move. So I will just take a 50 pips here and open 3 to 4 position or 4 position, that is about 200 pips on this trade. So we are expecting that this trade will come down to this point. So do you really understand? Now let's look at another example. Let's look at another example. Now look at this. Look at this. Look at this again. Look at this one. Let's draw our touches. Okay, this is, let's remove this one. Let's remove this one so that you not get confused. Let's remove this one. Now look at, we have this touch one. We would have waited for the second touch at this level. This is where we would have taken 50 pips movement. We would have taken 50 pips from here, from this zone to this zone. We would have taken 50 pips here and put our stop loss 25 or 20 pips. So we would have taken this trade, but we came late. This is a pass-through. We are just analyzing. So you see that from here we would have waited for this candle to come down and touch this zone and this support and resistance level. So we would have taken our trade from here to this place. So we get our winning trade. Now, even that without be said, this was the second touch. We have number one touch, number two touch. So number three touch, we would have expected it either here or here at this zone where these two lines intersect. You know, this one happened here, this one happened where these two lines intersect. So since it did not come down to this point, we would have waited for the trend to come down to where these two lines intersect. So at this point, this is where we would have taken 50 pips movement to this place. So we put our stop loss 25 or 20 pips away. So we would have made this profit. We would have made this profit. So at this touch, so after this three touch, this trend expires. So in case you are trading, let's look at another pair for easy. Okay, let's look at USD JPY. Let's look at USD JPY now. Okay, USD JPY. Okay, I've already drawn all, so I've analyzed this 10 before, but let's remove all these ones so that we can understand. Okay, look at what I am saying. So all these drawings now are 50 pips movement. So we've drawn our zones from here. So what do you need to do here? Just draw after you've analyzed these things and measure all this your 50 pips stuff. Now at the time you are drawing this one, so make sure that you have, look at this, look at this. This is number one touch. We would have taken our trade at the second touch, or we wait for the third touch. Now this is the third touch. So at this third level, you know, this is a downtrend. Let me draw it perfectly. This is a downtrend, and this is a resistance level. Look at the resistance level here. From this place is resistance to this level, as you can see. And now this is intersection. This one is coming to touch for the third time. Now after this third touch, it will expire. So what we will do at this point is, this is where we'll take our trade here. So we will now wait to have a sign for an entry. Do not enter yet, but I know this is a good opportunity for us to take a trade. So we're going to make this trade. So we'll wait patiently to have a signal, maybe an indicator that shows that it is time to take a trade. You know, this is candlestick. So when I look at this rejection, this one is getting rejected, this one, so I will only wait. I will not take this trade, but this is a point where we can actually take our trade to the downside, this place now, this level. So we wait and wait until we get a sign, we get a signal in which we can take our trade. Trust me, we're going to make this trade when it happens. So we're going to take 50 pips to this level. So this line was charted. Let me see how it goes. So we're going to take 50 pips from this point down. Measure your 50 pips and make sure you have it correctly. Okay, this is 100, so you take 50 first. Okay, so you take 50 per first. You take 50 first, then if you want, you may continue, because from here to here it's going to give us around, this is 640. So you're going to measure 60, 50. So I'm just rushing up because I don't want this video to be too long, but I know this is our entry. So I will first take 50 pips here, then measure another 50. So this is how it's going to look like. This trade must give you 50 pips. Open 4 position, that's 200 pips. You walk out of the market. But I really know that it will drop to this level. This is where the market will end. It's going to take 100 pips movement. But you see that what I want you to understand in this place is the touches. After drawing all these things, make sure you follow the touches. After this one, now when this market drops, this line expires. Do not take any trade again. You have to wait for another opportunity. Do you understand? So if you have any question, please do well to comment on the comment section below. Subscribe to this channel. Do well if that makes sense to you.